All right, everybody, welcome to video 2 of Mortgage Mythbusters. We are very excited. We've got Jennifer Burton and Christina Neese on here. And again, we're here to help educate first-time home buyers and renters to help achieve the home buying dream. I want to share some info today on this video about the money that's needed out of pocket. So the cost of a down payment, the closing costs, what all does that entail? What is earnest money? So we want to jump right into that. So there's different loan options out there that are available that a lot of people don't know about. When we talk to home buyers or renters, a lot of people assume that you have to have 20% down to buy a home. And actually there are plenty of options out there which are much less than that. So as we look at this graphic here, you see that one of the most popular loans is FHA, which is 3.5% down. And then conventional can be as low as 3 to 5% down. And there are some programs depending on income and location of the home that can get it down to 3%. And so when we look on the right here, this shows several different types of 0% down programs that are also available. USDA, which if the home is in an area that's qualifies as rural housing, that can be a 0% down loan program. If we have a borrower that's a veteran, VA financing is available at 0% down. And then in the state of Indiana Housing offers some grant money programs depending on the location of the home, the income of the borrowers, and a couple different factors that would also qualify for up to 6% credit for the buyers that would include the down payment. So a lot of great options there that really open up the door to people that are first-time home buyers or maybe don't know it and they're renting and they don't know that this is an option. So we're really excited to present these and encourage people that this might strike a chord with to reach out to us as a real estate team, a group of realtors that could help answer some questions, and also our lender partner Ruoff that really can go into detail on what these loan programs look like. So we've got a graphic here too as well, from Ruoff, provided by Jennifer Reynolds. It kind of goes into further detail of what exactly these loan programs look like in terms of down payment. And Indiana Housing's on there as well. Kind of talks about the pros and cons and the money included in it. So in a general ballpark, of course, on a video like this, we can't talk interest rates, we can't talk specific closing costs, but closing costs are generally going to range in a couple $1,000s range up to maybe $3,500 on a kind of a standard average loan. Jennifer, that's something that a buyer, if they don't have the full amount, that they could ask the seller to actually pay for them. Is that right?
That is correct. It's something that we can definitely ask the seller to take care of to help the buyer get into the home.
Yeah. So that's all the part of negotiating that we as realtors will help frame an offer that makes sense. And if that's something going into an offer, we'll weigh pricing, based on that. Christina, let me loop you in here because I often hear the feedback from you that when talking to people that are leasing a home or getting ready to lease a home, that they actually have about the same amount of money saved up to rent as they could maybe to even buy.
They do. Generally, depending on the day of the month that you choose to move in, you need at least first month's rent plus a security deposit. Depending on who you're leasing from, sometimes you need 1.5 months rent as a security deposit. Or if you choose to move in after a certain date, a lot of companies say that you need to have your prorated amount of rent, your first month's rent, plus your security deposit, which could come back at that 1.5 months rent or 1 month's rent, which is typically average. So you're somewhere in the range of $3,000 to $5,000 right there. A lot of times you'll see there aren't any specials or anything like that. So you're right in that range of about 5,000, a little bit under. So I see it all the time. People don't realize that when they come back at a 1 month credit score either, that wait a minute, let's sit here, let's look at this again, and let's see and reevaluate, you know, should you move on to just home buying? What do you need to do? What's good for your family for the short term right now? You know, do they have a plan to buy and they think it's unrealistic, so they need to put themselves on a 1-year, 2-year plan? But while you're paying rent, sometimes having that money saved up is harder to do. So if you've got it right now, it's kind of like, let's explore those options and see what we can do with it.
Exactly. Yeah. And when a buyer goes to buy a home, something that they can do with their real estate agent that we often do is lay out what the closing costs look like. We help a lot of people buy and build new construction, resale homes. We even help investors. And when there's financing involved, we like to lay out what those costs, you know, look like. And typically when you buy, there's a property tax proration credit that goes back to the buyer that helps offset some of these closing costs. And earnest money too, it's a deposit that comes up front, and that also credits towards your actual closing costs and down payment in the end. So certainly there's factors that go into different transactions and different loan types, but kind of wanted to give a general view of that. And you know, if you fit the criteria and you feel like home buying could be something that's an option for you, we'd love to talk to you. So hopefully this video was helpful, and we look forward to seeing you on the next one.